Hey folks, Dan Frio here with your Mortgage Minute. What we're going to talk about right now are those out there that are building houses and looking to buy houses. There's going to be information in here that's relevant to everybody, but those are the two biggest people getting affected right now because rates continue to rally and rally and rally. Just think if you were building a house, in the process of building a house, and you contracted last year when rates were 3 and now rates are 6. Do you still qualify? Then the lender for the builder always comes back and says, well, we can't lock in until 30 days prior to close. So these reports you see every day that come in, rates are going higher and higher and higher. You're sitting there saying, okay, what do I do? Well, at the end of the video, I'll give you some ideas on how we can do an extended rate lock for you, program that we have available that'll lock you up to 6 months. So if you're in building a house, or if you're even looking to buy a house right now, we have programs for you there as well to lock in at today's rates. But let's see what's going on with mortgage rates for today and why. Okay, so the first thing I want to go over to is, well, here's where mortgage rates are, where they ended Friday, but we'll get to that in a second. We go to the economic calendar. What events are taking place this week that might play some havoc in the markets? Wednesday is going to be a huge day. You have on there, we see the GDP report, how it came in. Is this going to validate a recession or not? We have Federal Chairman Powell speaking. Every time he speaks, the markets cringe. He did very well last week in kind of calm the markets. And then we have crude oil inventories. Why do I follow that? Well, this is the biggest piece of the inflation puzzle. And then we see on Thursday's initial jobless claims, so job numbers. So between Wednesday and Thursday, we have a lot of economic news coming out that probably going to play a role in what's going on with mortgage rates. The next piece of the puzzle is GDP. We have negative GDP for the last 2. They're going to probably confirm here that June's a negative GDP next month, but some of this data is coming in as we speak. So we'll monitor that and see the recession front there. Because why do we watch that? Well, recession, basically, the definition of recession is 2 consecutive quarters in the United States of negative growth or negative GDP. And you can see right through here, this report, they've been running negative for the past few months. So we'll find out more on that soon. More economic data. We have the economy is starting to bend. Is it going to break? There's a newsletter that I follow, I'll put down below, that I think you'll find very informative. It's showing you how employment numbers, production, personal consumption, and everything is starting to really fall off a cliff. So I'm going to have that there. And then some more bad news in regards to your pocketbook. Over 13 million people are going to see their health insurance at the marketplace go up at least 50% or more. So welcome to Monday, folks. All right, so why are you here? You're here to figure out what's going on with mortgage rates. So we follow this. Let me refresh it real quick. This is a live event. This is what's going on with a mortgage bond on Wall Street. Okay, we follow this because the yield on this bond is the biggest piece of your mortgage rate. So what we follow here, as you can see right behind my head, the market is down right now, 19 ticks. So that means the price of the bond is dropping. What happens in that case? The yield goes up. Okay, there's an inverse relationship. So when the price is down, the yield is up. Well, what's the yield? Well, it's part of your mortgage rate. So the mortgage rate. So in this case, your mortgage rate would be going up. So far today, mortgage rates aren't looking too good. So let's get to where they were. Well, why do I say where they were? Because Mortgage News Daily has not come out with mortgage rates yet today. So this is where we closed on Friday. Okay, so here's where rates are. You can compare it to what you're getting and the deviations. So the deviations, what I mean is if you didn't lock in on Thursday and you waited till Friday, when 4 of these buckets here, your rate went up. Okay, the only bucket that dropped was VA, and they dropped pretty substantially, over 0.25%. So I post this every day, not only for you to see rates, but to see what happened to the rate from the previous day. And again, these are not my rates. This isn't a particular bank's rate. This is the national averages, okay? Down through here, we have a nice trend for today. It's neutral to negative, but there's really nothing coming out today that should play havoc in the market. You're gonna start seeing mortgage rates and things moving just on what expectations are based on the economic calendar and a bunch of other things. And that's why I show you this data. So I created a website. If you guys want to check out your free credit score and learn more about credit, go to the creditscoresandmore.com. It's plural, creditscoresandmore.com. And there's the only one I really want you to look at is a free report right here. You can click that. Don't subscribe to any other paid services and things like that, just use that. But if you really, you're consumed with credit and your credit scores are, they're number one to you, you can go right here and you can order your true FICO credit scores. It's the same report basically that we get, and you'll be able to order that on your own. And if you use this link, I think you get about 20% off. But my name is Dan Frio. I do this every day. We're a mortgage advisor, I'll say it that way. We can help you anywhere in the country, help you get a mortgage. Our two biggest products right now are if you're building a house and if you're looking for a house. You've been sitting on the sidelines watching rates go up and up and up. And if you're building, most times your lender says can't lock until 30 days prior to close. Well, get in touch with us. We can lock you up to 6 months prior to close. So find out more about that. If you're also shopping for a home and you're not building, but you're just shopping for a loan and you continue to see that those rates go up while you're shopping, call us also. We have a lock-in shop available for you guys. So to find out all these products and more, you can go to our website, therateupdate.com. Right over here is all our contact information, or you can even chat with us live. So that's it for today. I'll be back around noon today to answer any questions that you guys have and give you an update of the markets. So thanks for watching. God bless. Have a great day. See you soon. Bye-bye.